Good morning, folks. This is Wednesday morning, the 12th of February, and I'm just going to take a look here at this Australian dollar. Now, this is one that looks quite weak. It's been in a long-term downtrend, as you can see. This is a monthly chart going back to before the turn of the century, and you can see where we are now. Made a low back here, had a nice strong rally up into about 2011 or so, and then you can see since then it's been basically downhill, apart from a few little rallies here and there. And you can see now it's sort of over. It's about 11 or 12-year lows. This was a low we made in 2008, and here we are now at more or less the lowest levels since we've seen since then. And there is an ABCD off the high we made in 2014, and if this starts down, this is going to take it down to about 55. 55, that's that, down about 12 cents from where we are now. So if we come and have a look where we are on the daily chart, and we can see clearly we've had a nice 3-day bounce off this swing lows. Is this about all we're going to get? Well, we did make a new low. It looks as though it was going to break down last Friday, but it's managed to pull itself around. Is it sustainable? Well, it could be, but looking at it, we're into this resistance. It's tested it once, backed off. We're coming into this resistance again. The 382 off the whole swing comes in here, and so does the 50% off this little swing high here. That comes in. So 68 looks as though it should be real resistance for the Australian. If we come down now and have a look at a 60-minute chart, I don't know what happened there. We'll just remove that. Best ABCD I've ever seen is that one. Right, you can see where we are. You can see this clear downtrend. We're at the 382 off a swing high here, the 786 off the last swing. So if this thing starts lower, there's another ABCD comes in. That's going to take us down to this 66.40 area, somewhere in that moment. That's set up a 3 drives to a bottom. I could see another bounce. If we zoom in on this, there is an ABCD that's completed just about. If you take this secondary high here, if you take this secondary high or low, there is an ABCD structure that's just completed right there at this 786 level. So this is an area where it could start back to the downside if, and all we're basically doing is we're selling the short-term uptrend and trying to pick up the bigger term downtrend, if that makes sense. So we're using this bounce as a gift, if you like, for a nice area to look to get short. And this is what we're trying to do with this. So looking to enter the trade, I'd come down to a 15-minute. I'll be looking for the market to make some sort of a lower high. Here we are on this on your 15-minute. The ABCD we've just looked at with this one here. There's another one there as well, I think. From this swing low, you've got one. It'll be very close, coming in somewhere up there as well. That's completed. So you've that ABCD, the one we just looked at off this swing low, to that high there. See, that one comes in right there as well, very close. So this might be an area. If we get any move back below these two swing highs here, start lower. It's very low risk. We're only going to risk about 20 pips, 25 tops on it, and then we should get at least a move down at least 100 pips from down here to complete this daily ABCD. What I'll be looking for on this. So there's the ABCD. Initially, that comes in around about 66.20, 66.30 area, about 110 pips from where we're trading right now. Your risk on it, like I said, 20, 25 pips. You're going to get 4 or 5 to 1 risk reward on your money. So I'd wait to see the first higher low, first lower high, and then take out this. I mean, it might just be a little A, B, C, D, and then it starts higher. But there, your risk is literally that. If you want to be really frugal, you could sell it on a break below here and put your stop above that. That's very, very low risk. And then see what unfolds. But okay, so that's what I'm seeing on the Australian dollar. So take care and good luck with your trading, folks.